Bankole Odusanya, head fixed income trading at UBA, joins us from the banking hall to discuss this and other stories at Nigeria's fixed income and FX markets. Bankole, thank you for joining us today. Let's just hear your perspective on this latest addition to the list of items by the CBN that are no longer eligible for FX.
Okay, thank you, Esther. Removing textile as part of what used to be eligible for FX, honestly, I think it was done on the back of the success recorded with rice importation limitation and restrictions that have been done in the past. Of course, the figures on data coming out says that Nigeria has now gone above Egypt in rice production due to marginal improvements that we've seen with local rice production. Of course, that's the target with textiles also, to revive the textile mills in Isolo in Lagos, Kaduna, and some parts of Aba. The plan is to ensure that we limit FX flow to that line, and then to ensure that we start producing locally. I know that there's been a lot of work being done to diversifying and then reducing how much we spend on FX on imports.
But would you say that there will be a marked difference, I mean, in the FX if these category is left out?
Okay, the 41 items as introduced in itself, honestly, helped a great deal in keeping the currency stable since 2016. And in adding to this, honestly, they're trying to ensure that we continue to sustain this level of stability that we've seen. So if it has worked for the initial 41 items, bringing in textiles will simply make it improve, and then like using one stone to kill two birds, not just managing your FX here, but also encouraging local production. Like I said, the targets are reviving the textile mills in Kaduna and then in Aba. So it's worked for 41 items. If we say 42nd or 43rd item is coming in, then it simply means they're looking at sustainability of a success that has been recorded already.
Okay, let's catch up on trading at the fixed income market. Bring us up to speed on today's performance at the market, and also that almost sale that we saw yesterday, 169. The CBN offered 150 billion, but sold 169 billion at the end. Well, talk to us about the rates that we saw.
The major highlight with the OMO issuance is that the central bank has, in the last two offers, not issued one-year bills. They've reduced the tenors that they've been showing to the market to between 90 and 100 days. All hands are on deck to see what will happen on Thursday, because there are maturities of one-year bills. The maturity this week is not so much; it's less than 200 billion. And there are two sides of thoughts, two schools of thought that says, oh, they will issue 1 year, and some simply believe they will continue in the recent trends that we've seen. So basically, that is causing some level of volatility in the market. We've seen mixed reactions to trading in the secondary market, especially on the treasury bill side across the yield curve. In the morning, usually we'll see people sell down bills at 13 and 13.2 levels, and then start buying back at 13.5 levels. So even if there were to be a one-year issuance on Thursday, the dilemma or question or uncertainty now brings to is about what level this auction would stop. That is what level the stop rate would be closed at on Thursday.
Now, still
so that's the challenge we're looking at now.
Still on this same auction yesterday, is there a reason why you think the CBN refrained from offering the longest dated bill at the auction?
I think there was a very sharp drop in the stop rates. We're coming from 15% down to as low as 14.3 at the auction, and then the secondary market reacted even far more aggressively, with rates dropping to 13.2 as at last Friday. So what they've done is to ensure that they supplied so much last week, Thursday, that was about 900 billion, and then they're watching carefully what's going on in the secondary market, because from the way they've issued and brought out these tenors, you see that they are actually offering the tenors that are actually very active in the secondary market. And of course, as the yields drop for them, it's cost management for them. But on the other hand, they do not want the sharp drop to continue because it just makes our securities unattractive to the FPIs who have shown interest of late. So it's keeping a fine balance in managing their cost, the amount which they pay for mopping up, and then ensuring that the securities remain attractive, basically. So it's a it's a very Herculean task, keeping a fine balance right now.
Yeah, I hear you. Now, for the rest of the week, what is your forecast, especially for the bond market? What we're hearing is that we could see a continued sell-offs at the bond market.
Yeah, what happened was at the bond market, I think it's a knee-jerk reaction. The rate, like I said, the rates dropped so sharp that we saw a 100 basis point drop on yields compared to the levels where the last auction stopped. So there was room for profit taking. There was a lot of profit taking, and then we saw reversal in prices, going down and yields climbing back up. So basically, tomorrow's auction and what level it comes out at, that's the stop rate, and the volume of 1 year issued, if any, will determine the way forward next week. So basically, there's a lot at stake at tomorrow's OMO auction.
Let's quickly talk about the FX. I know we talked earlier about, the textile materials being taken off the list, but at the INE window, what would you say has been the trend since the beginning of the week in terms of demand and supply, pressure on the Naira, and if, we've seen the Naira hold steady against the dollar?
The trend has remained the same. We're seeing FBIs bringing in funds, and there's, as it were now, oversupply compared to demand. So most times, because of the restrictions on the level of open position you can keep on FX, you have to sell to the central bank, and the rates have dropped from 360.5 to even as low as 359.25 levels. So there is a lot of dollars in circulation and fewer Naira chasing the dollar because of the continued mop-up we've seen using the OMO instruments and tightened stance of the central bank. So basically, rates have continued to drop on marginally, and we can say that the Nigerian currency versus the USD is very stable, with potential for more strength.